this is a very unusual recession, if indeed we are in a recession, because you've got so much capital still on the sidelines, over $4 trillion cash. So worldwide. And so, this is not your grandfather's recession. Plus you have full employment right now. And the Fed, the big debate is what is the terminal velocity of that interest rate? Is it going to be 5? Is it going to be 5.1, 5.2, 5.3%? We just don't know yet. Rates are down today after the latest data. So, there's a disconnect between the Fed pounding the table saying we're going to keep raising rates and what long-term bonds are doing. They don't believe them. And so, it's a very unusual situation. The Fed can keep making noise, but it's not working yet. And certainly it's a tight labor market.
Shark Tank star Kevin O'Leary, who has received so many bouts on the FTX debacle and the series of rumors that came after it, is back at the financial market forefront. He also recently started a new TV show called Money Court. In this video, Kevin offers his insights on the recent improvement in inflation rates, the disconnect in the bond market, and how rising interest rates are affecting his capital structure decisions. He also talks about the future of digital payment systems and the need for regulation in the crypto space. Stay tuned to hear his thoughts on where he sees the economy heading and whether we will see a completely decentralized form of money in the future. Kevin starts by discussing the current state of inflation, noting that while we are nowhere near the Fed's 2% target, the 6.5% inflation rate is a big improvement from 9.1%. He also points out that the housing data has rolled over and is not reflected properly in the CPI, which may mean that the real inflation rate is lower than the current 6.5%. Turning to interest rates, Kevin explains that he has kept a ratio of 30% fixed income and debt to 70% equity in his portfolio because he finds equity more attractive. He also notes that most companies are cutting costs, but there has been so much productivity with technology over the last 3 years that they have been doing a good job of that. He predicts some earning revisions in the future and that he is looking for companies that are cash flow positive and distribute profits. He also mentions that the healthcare and commodities sectors are interesting and he likes gold right now. He is not overweighting energy and he is underweighting tech because these stocks are still trading at over 20p over E, which is expensive. Regarding digital payment systems, Kevin states that there is a turf war going on over regulation and that there will be some regulation. He mentions the tuna hearings and how they see the merit of digital payment systems and cryptocurrencies, but they want it done in a regulated environment. We will now go into the video proper, where Kevin shares insights on his investment strategies, what industry he sees as leeway for good returns, and where he is putting his money at the moment. Make sure to listen carefully during the video. Also ensure you like this video, subscribe, and drop your comments in the comment section as you move on.
Now, one thing about that data, that CPI data, and lots of other analysts are talking about this, the housing data has rolled over in there, and it's not reflected properly in this CPI 6.5. The real CPI, if we actually were to take true pricing of housing in major markets in the U.S., whether that be semi-detached, rental units included, standalone homes, certainly office and industrial space, that has rolled over, and it is representing a too high an inflation rate inside the CPI because the data they use is 11 to 18 months old. So that's why you're seeing this disconnect in the bond market. Anybody that buys bonds, a fixed income balance sheet investor like me, knows exactly why these spreads have tightened, particularly on triple B credits. They don't believe that inflation is actually 6.5%. Inflation may be as low as 5% right now if we were to true up the data from the housing market. I have been going back into the crypto markets lately. Anytime Bitcoin drops below 17,000, I add to our positions there. Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play. And I think long-term, that's a good thing. These hearings in the Senate have really poked the bear, as I like to say. And I participated in the last hearings, and when I had a chance to talk to the people on the Hill, or the lawmakers, I sensed that they're frustrated now. They're tired of putting these hearings on every 6 months. Every time one of these crypto company blows up and goes to zero, they're so unregulated. These unregulated exchanges are just they're all going to go to zero. And what's going to come out of it eventually is going to be a regulated crypto market, which I think will be very interesting because there's real merit. I mean, crypto itself is not the bad guy. Crypto is just software code. It's not the software code. It's all of these rogue players and these unregulated exchanges and the issuance of all these meritless tokens the token on the exchange, all of this crap, if I excuse my French,
Yeah.
it's all going to go away. It's all going to go away. I've still kept the ratio of 30% fixed income and debt to 70% equity because I find equity is still more attractive. The way I look at equity now for the balance of this year, anybody that forecasts past a year, I mean, I don't know how you can do that, but right now I'm assuming the Fed is going to slow down a little bit and probably not pass the 5% terminal rate. And while they wait and see what happens to the economy. So most companies are starting to really cut costs any way they can. But there's been so much productivity with technology over the last 3 years that they've been doing a very good job of that. So you're going to see some earning revisions at some point. I don't anticipate any expansion to PE because we're still sitting at a 17 PE. So I don't think that's going to go up. So I'm looking for companies that A, are cash flow positive, B, do distributions of profits. So in other words, they take the cash and they distribute it through dividends. Some of them will do share buybacks, but not now that's being taxed. I think the dividend is going to be more popular. And so you have to be doing that without taking on debt. So if you have a clean balance sheet, not too much debt, and you're distributing profits, well, that's a good place to invest because you can probably make 5%, maybe 6% on capital appreciation in the next year, and maybe 1.5 to 2% in dividend yield. So I look at healthcare sector, very interesting. I like commodities. I like gold right now. I've pulled my horns in a little bit on tech because those are still trading at over 20 PEs, which is expensive. And those stocks have already had massive corrections. Media stocks are really interesting. They're fibrillating right now because of all the streaming losses, but you've seen some recovery in those names over the last 90 days as people start to say, well, who's going to survive the streaming wars and who isn't? Because media itself is an interesting business model if you think that you can get direct to consumer. Disney is under scrutiny now. I own that name. Nelson Phelps has said he wants to be an activist. That's probably good for the stock. And so you've got to find these situations. So underweighting tech, not overweighting energy. I think energy's had a fantastic run. But I think you want to take a little bit off the table there. It's been a very, very good place to be last year. I don't think you'll get the same kind of returns this year. Finding those large cap names in the S&P that have strong balance sheets across multi-sectors that pay distributions, that's the play for 2023.
Kevin also talks about the future of money and the trend of the division of money and state, and people are wanting a form of money used by the people for the people, not with any government intervention whatsoever. He explains that this is not going to happen because as long as you have a completely unregulated, decentralized version of money, you're going to have people ripping you off. He suggests that what is needed is much higher standards of transparency and accountability. When asked about how he would hedge against inflation in the case that the Fed does not reach their 2% inflation target, Kevin pointed out that he has been fortunate in the past decade to spread 6% of liquid across a very broad portfolio, and it hasn't been easy, but is honest work. Let's listen to what he had to say.
I have a 5% weighting in Bitcoin. That's actually been performing quite well, even with all of these scandals and everything else. I've got a large allocation to equities, no equity more than 5%, no sector more than 20. So it's very diversified. And I have a lot of cash on hand right now because of some sales I made last year before some of the taxes went into effect. Share buybacks. So I'm actually shopping to put more money to work, and I'm doing it. Looking at private equity, all kinds of new alternatives are emerging. And so the whole idea is my job is to get up every morning and put capital to work and find the path of least resistance. My bogey is to make 6% a year. Doesn't sound like a lot, but it's not easy. And so when you think of a broad portfolio, to distribute 6% cash, that's not easy to do. But I've been very fortunate in the last decade or more, and I've been able to do that.
In conclusion, Kevin O'Leary offers a wealth of insights on the current state of inflation, rising interest rates, and the future of digital payment systems and cryptocurrencies. He emphasizes the need for regulation in the crypto space and the importance of transparency and accountability to prevent fraud. He also shares his thoughts on where he sees the economy heading and whether we will see a completely decentralized form of money in the future. Overall, this interview provides valuable insights for anyone interested in the economy and the future of finance. We would like to know your views and opinions on Kevin O'Leary's macroeconomic outlook in the comments section below. Also, do not forget to like this video, subscribe, and turn on notifications. Thanks for watching.